a change to global liquidity. Here's example number one. Japan. Why does Japan matter? Well, it matters because remember how the world is structured. We have the United States, right? The police officer who controls the supply of money, exporting mostly the dollar and technology. But then we have China, which is the global factory of the world. It makes all the stuff for everyone. And we had Japan as the biggest interest-free lender because their interest rates were zero, actually negative, which meant something called the carry trade was possible. Long story short, investors borrow Japanese yen at low rates, they take that money and invest it somewhere else for a bigger return like US Treasury bonds. Guaranteed difference on the spread. That's called the carry trade. But long story short, it was a very easy and a free way to make a guaranteed return on your money. But now that's changed because Japan's interest rates are going up, which means no more borrowing free money and a change of incentive. Meaning, money right now could be leaving dollar-denominated assets and going back to their homeland where interest rates are high enough to make sense keeping that money at home. Now, yes, technically US interest rates are higher than Japan's, but once you factor in the cost of converting yen into dollars and back and forth and the currency hedging costs, the yield advantage basically disappears. In some cases, it even turns negative. So whether you're a Japanese pension fund or a global hedge fund, it now makes more sense to sort of unwind those trades and to sell those dollar assets and to bring the money back home. That is a very big deal. But there's also a second change to liquidity, and it should be good news technically, but investors perceive this as bad news, and here's what happened. The Fed announced that on December 1st, they'll be ending QT, or quantitative tightening. Now that is good, but it's also technically bad because when the Fed ends QT, it usually means they are seeing signs that something somewhere in the financial system is starting to break, or at least is fragile. Of course, the Fed is not going to tell us that, so they're like, we're just doing this to be ahead of the curve so we don't end up causing a recession. But investors are like, well, we don't really believe you. Circular funding in the AI bubble.